Hello everyone, my name is Mark. I'm a CPA and accounting tutor for Chegg. And right now I'm going to talk to you about the bad debt expense and allowance for bad debt. Alright, so what is bad debt? Well, basically, when a company makes its sale, it doesn't always collect the cash up front from its customers, and the customer might just promise to pay that money in the future. Well, if it turns out that a customer will not or cannot pay the company back, that's what's considered bad debt to the company, because it's never going to see that money. So let's say, for instance, a car retailer sells a car to a customer. The customer takes out a loan, and then that customer goes bankrupt, can no longer pay the car retailer. That car retailer needs to account for that bad debt and for that money that's actually never going to see now. And there's two ways to account for this. One is known as the direct write-off method, which is not what we're talking about right now. But that's basically just when a customer says, like, hey, I can't pay you, and the company says, okay, just writes it off. And then there's the second method, which is what we're talking about right now, which is called the allowance method. So what is the allowance method? Well, basically, it is when a company accounts for the bad debt before it actually even happens. So they anticipate the bad debt, and then they estimate how much it's gonna be each period, and then create the expense at the beginning of the period, and then they create an allowance for that bad debt as that period goes on. So when is the bad debt an expense then? It's an expense at the beginning of the period. So how do you account for it? Well, whenever a company makes a sale on accounts receivable or something like that, they're going to debit accounts receivable and credit the sales revenue. So that's the sale. And then at the beginning of the period, they're going to create this allowance for bad debt. Remember, we said they create the expense at the beginning of the period. So they debit an expense, bad debt expense, and in this case, they did it for $500, and they credited the allowance. That means they're creating an allowance for $500. So you might want to think of that as almost like a savings account or something. They now expect that they will not receive $500, and then they can use that throughout the period. So later in the period, say a customer comes to them and says, hey, I can't pay you. Well, okay, then the company's going to make this journal entry, this second journal entry, which debits the allowance for bad debt. That brings down the allowance, and then they're going to credit the accounts receivable to bring down accounts receivable, because they no longer expect to see that money. They have to take it out of accounts receivable. So it can get a little more complicated sometimes. So say they only created an allowance for $500, but now the customer comes back and says, hey, I can't pay you $800 that I owe you. Well, then you're going to have what's known as a debit balance of the allowance. Debit balance of the allowance, which means it's kind of like a negative allowance. You went over your estimate, which is okay. That happens. It just means that you need to then credit allowance more and also increase your expense. So you're going to say you had an allowance for $500. The customer said they can't pay you $800. You need to make another entry that shows bad debt expense, the additional $300, and then credit the allowance for an additional $300 as well. So you're going to see this on exams for sure. The questions are going to ask you probably, how do you make the journal entries for bad debt expense and allowance for bad debt? And again, those are right here. And then it might come up with a question that asks you, okay, what do you do if you go over your allowance? What kind of journal entry do you make to increase your allowance? And again, that's pretty much the same journal entry that you made first, except it's going to be later in the period when you go over an allowance. Okay, so that's it for bad debt expense in the allowance account. If you have any questions, absolutely feel free to reach out. I'd be happy to explain anything further. If not, I appreciate your time to watch this video, and I hope you have a great day. All right, bye everyone.